Hey traders, my morning video here real quick. Okay, I didn't do one over the weekend, so we're getting it done this morning. I got a cat here every morning that wants to chime in on the videos. This is my fourth take on the video, trying to get the cat back the other side of the house. So see if it'll play out today or not, or this time or not. So basically, what I got going on here on the news front here, there is a rumor out that Intel might be merging with AMD. So got a lot of volume hitting Intel this morning. It's up $2 a share. Well, $1.50 a share. $1.50 a share on Intel. That's a big move for Intel. $1.50 a share. So you're over 10% move here, or somewhere around 10% move or better on Intel this morning. Nvidia is continuing its trek higher into resistance. You got some pretty good resistance around the 143 area, potentially here for Nvidia. So let's definitely keep that one on watch. It can just walking up here with the rest of the market. Okay. Another big thing happening here. 2 days out from Alibaba's earnings, and we've been seeing a massive inflow of cash into the China internets. And I would have to say, no matter how bad Alibaba's numbers could potentially be, that we're going to be facing a higher low, even on a pullback on Alibaba, as all of a sudden now China names are uh, they were deemed down and out on the AI trade, but now DeepSeek has proven that hey, China is likely to hold its own on AI. So that's the feel. So we're in a period in time where price to earnings multiples are expanding in China dramatically. And remember, guys, these were left for dead. So these earnings multiples are really cheap compared to historical uh, uh, valuations. So they could have a long ways to go here on the China names. So be very mindful of that. In On the flip side, though, price to earnings multiples in the United States are very expensive. Okay, so just be very mindful of that. How the price to earnings multiples are virtually 2 times what they historically are. Okay, and so I definitely want you guys to be very mindful of that. So some things we got going on here. We are trying to break a very critical bullish support this morning here on our ZNs. Now, that is our 10-year bonds. So as this goes down, that means yields are going up. This tends to be a risk-off indicator if this were to break here. So basically, there was all kinds of perma bulls in the 10-year treasuries, and we saw this for a while now, and we're threatening to negate that bullish sentiment as we push down here. So to be very mindful of that, if you go out here in a bigger time frame on, let's say, 4 hour, the 4 hour here, we're back testing this critical area. We're potentially breaking down back down here into this lower consolidation area. Okay, so be very mindful of that. This is a warning to the markets that yields could very well still be trying to push back to 5%. So they've come down considerably, but we definitely got to keep this on a watch here as a potential that that they just can't hold anything here. So we have this head and shoulders, okay, for a breakout. So we had this head and shoulder pattern. We completed the upside target. Okay, now we're potentially putting in a lower high at the 50% of this target. This is your textbook setup to be setting for new lower lows here on ZNs. Now I don't know if that's going to happen, but this is what you would be looking for, textbook, and this would be a potential risk off indicator in the markets if this were to start playing out here. So be very mindful of that in your trading. Okay. Then, okay, we're gonna go over here to my ESs now. Now I like using the futures charts for SPY and SPX because they're more clean. The levels are much more clean on those charts. Okay, so some things I'm looking at here. I'm gonna go into 1 hour here, and I'll give you a little bit better idea. And here comes the cat. Okay, guys. So what we got going on here on the upside, guys. So we are into what potentially could be significant resistance today, guys. So for one thing, there's a large today's expiration. There's a fairly large at the 6150, a fairly large open interest at 6150 here on today's expiration. It's not the biggest, but it's a hurdle to get through by any means. Okay, so that's one thing we have to think about right there. Okay, and so that is above 6150, we are in a form of a positive gamma situation above 6150. So be very mindful of that. Another thing, uh, right here, this line, we tagged it. We came up, we tagged it this morning, or well, it came right to it, right close to it. Well, right here is your daily 2 standard deviation. Uh, so if you put your Bollinger Band on your charts and with the 20 SMA on your Bollinger Band on the daily time frame, this right here is your Bollinger Band high. So be very mindful that we could actually potentially push up just a little bit higher early on this session to get into that to find more resistance. So I definitely want to keep that in the back of our minds here as we go forward here. See here if it shows up different on the 4 hour. Sometimes they show up a little bit different. Yeah, so we came up to it. We just missed that 2 standard deviation resistance. So yeah, early on this morning, we might get a little push up there into that area. Okay, and we do have the prior all-time high right above that uh, 2 standard deviation. So both of these scenarios are we could actually fail anywhere into this area. So I would think sometime early this morning we're probably going to get a push. Yeah, initial push up into this right here, and then I would be looking for possibly a fail and maybe try to because it is a big, upper Bollinger Band thing, a potential attempt to fill some, if not all, the Friday gap. So let's definitely keep that in mind. So, and then that would be back testing this trend line as well. So that's the main scenario that I got there. A lot of people think, oh, we're done. There was a lot of insurance put on the markets Friday. A lot of VIX calls were bought Friday. But in my opinion, the 20 SMA upper Bollinger Band on the 20, this is probably an intermediate resistance area. That's why I do think there's a good chance that we're going to backtest, fill most, if not all, the gap today. Um, it's an intermediate resistance, okay? But what we've been doing week after week going into this week's option expiration, yes, this week we got a 4-day trading week and it is February OPEX, okay, guys? And this is the week that we finally have a expected market maker move high above 6200, okay? And at 6200 we have a call wall there, a major call wall at 6200 for one thing. That's our monthly call wall. All kinds of open interest at 6200, okay? We also right here around the 6200 area, uh we have a that's your 2 standard deviation on Bollinger Bands for the with the 50 SMA on the Bollinger Bands. That's right here also. Okay, we got a big cluster of calls up in this range as well. Okay, and there's also a weekly 2 standard deviation. Uh, uh, 20 SMA, I think it's a 20 SMA maybe. The weekly 20 SMA, that's right up in this range as well. So we got a big cluster of Bollinger Bands on different time frames. They're all hitting right here at the 6200. That's why I think 6200 is more of a long-term resistance, not intermediate, long-term. Thus, the way the price action has been going all month, knowing that we're going into OPEX this week, suggests to me we might finally get that final push right into 6200 long-term resistance. Hopefully, a big gap in an overnight session to push us into that 6200 area, where then we might be finally looking to the short side in the markets. So it's kind of my theory in the markets. I don't want to be overly short the markets yet. Okay. Okay, guys. So coming into this week here, guys. So we're opening today at the upper Bollinger Band with the 20 SMA and the 50 SMA both hitting at the same time here on the NASDAQ. So we're into dual resistance coming in to the NASDAQ. This suggests to me we will probably see relative underperformance to the upside on the NASDAQ at the current price point in today's session. So So be very mindful of that going forward here. I really don't want to be loading the boat in tech, knowing that this is probably a pretty significant resistance area. At least this is the first time we've ran into it, so we could see some back and fill, off of this pretty, pretty early here. So I definitely want to keep that in the back of everybody's mind that this could very well happen. Okay, we're about 85 points over Friday's close, and coming down 85 points is really nothing in the grand scheme of things. We'll do 60 points in 20 minutes, so, you know, coming down 85 points and filling Friday's gap, that's not a big deal on NASDAQ because, okay. Other things we got going on here. Uh, uh, we have our prior all-time highs down right here at 22,452. That's really not that far at all away here for prior all-time highs to back test that here on the NASDAQ. Okay. We have that well within our expected make a move for the week to the upside. Okay. 22,600 is basically our expected move for the week. Okay. We have a lot of open interest, monthly open interest and stuff, resistance around the 23,000. So there's pretty good odds that we will not break above 23,000 this week. But I mean, anything can happen. But there is a lot of resistance up here in the 23,000 area, so we have to be mindful of that. Okay. There's another note there. I gotta activate text note. This cat wants to talk, guys. So we have the 100 SMA Bollinger Band. The upper Bollinger Band's up here. Okay, so it suggests to me the NASDAQ does want to get 23,000 before the long-term target is achieved. So I just want to definitely keep this back in the back of everybody's mind that 23,000 is definitely a potential target uh, for the NASDAQ. But we got a lot of uh, upper Bollinger Band resistances here, like the 20 SMA weekly. That's right at the prior all-time high. So that's given us dual confirmation of prior all-time high, and we have an upper Bollinger Band both hitting at the same time. That suggests to me that at some point in time this week we will be tagging, at the very least, tagging the all-time highs on the Nasdaq going into for OPEX. So I don't want to be overly bearish, knowing that this here is a fair value gap, and so far, that is in the since we've been off, that has held like a champ. So I don't want to get overly bearish because even the fair value gap, we're holding support coming into today's session. So I still think that there's more. It's more likely that we're going to complete higher upside structure before we see a pullback. So be very mindful of that. Okay. So this, like I said, this could be an intermediate resistance, double topping the Nasdaq at the 20 SMA. You know, uh, that's definitely a possibility. So, but don't get me wrong. 23,000. That's a big target for the Nasdaq. So we can't disconnect. We cannot discount that possibility as well. But that would be way out the expected move for the week. It would take an outside event, some sort of news catalyst to do that. And it's only a 4-day trading week, so be very mindful of that too. Now the bearish chart, more bearish chart that we're following here, that's the Russell. So every time we get above 2,300, that is a problem for the Russell. Now, technically the neckline is actually, and they are defending it here. So what we got going on here on the bigger time frame is a head and shoulders, and down here is the neckline. Okay, this is the neckline high right here, and they are defending that. They have defended that for days now. So be very mindful of this, that how they're defending this neckline. If you go here on the bigger time frame, you can see what I'm talking about. This is a head, okay, and this is the neckline right down here. Okay. So right down here, where that brown line is, that is our neckline down in this area, and they have been defending that neckline, at a higher high, a higher low, at right where they should defend that neckline. So be very mindful of this scenario here. We've been pretty much going for weeks now, just been pretty much going sideways. Okay, We're below the 20 SMA. We're opening below the 20 SMA. I don't want to be taking it to the long side, knowing, unless we come into 930 and we're trying to break above the 20 SMA. Okay, so we still got a lot of resistance to uh, uh, to get through. Also, remember, guys, our monthly. This is the one we could. There is the potential of a massive squeeze in the wrestle this week because 2300 is the monthly call wall. That's expiring Friday. And we're right here at it. So we could be actually potentially breaking the Russell to the upside by the end of the week, causing a positive gamma squeeze. And that could be a catalyst for the rest of the market to go higher as well. So just be very mindful how close we are to that monthly call wall. I mean, it's something we have to be concerned. This could be the catalyst to drive the markets higher. So uh, I don't want to discount that scenario. So, guys, a lot of you guys are talking about all bearish in the markets and stuff, that we're hitting a major resistance level and stuff. So, typically, what really causes a big sell off in the market? That's whenever smart money is not positioned for a bigger sell down in the market. Okay. Right now, our skew is at 167. Okay. And just recently we were all-time highs in the 180s. Okay, we were all-time highs, on the skew. That means, so basically, when you have a high skew, that means there's a lot more out of the money puts than there are out of the money calls. Okay, guys. So what this is suggesting to us, everybody's already hedged. Okay, this is suggesting that everybody's already hedged. So when we do get the downside moves, you know, they're taking the hedges right off. Okay, because everybody's already hedged. So and that's why we're getting shallower and shallower pullbacks because everybody's already hedged. And that's why it's not indicative of a big sell down in the market. Yes, we can come down, have a nice little correction. There's nothing stopping us from doing that. But like I said, we're already hedged. So ideally, we want the skew down in this area, okay, for a big sell down in the markets. And what's going to happen is a lot of the out of the money puts come Friday, that'd be February's expiration, a lot of those will come off. We'll come in Monday morning, and we might be coming into 155, 150, right after the expiration, February's expiration, because all those puts have rolled off the skew. So let's be very mindful of this. We don't want to be overly bearish yet because everybody's already hedged going into this week. That's another thing suggesting to me I don't want to be overly bearish yet. Okay, guys, I want to finish out that the VX futures here, and a lot of people we saw some big trades getting some uh, VIX protection going into March, coming into Friday, and they did this after hours. So let's be very mindful of what they did. But if my theory is right and they're still trying to push us to 6,200 for the longer term resistance, which I think that's the case, I think there's a really decent odds that we can actually come down here for a tag of the 14 here on the VIX. So I don't want to be going overly buying a bunch of VIX calls yet. I think it's it just seems to me the VIX, it looks like that this area it's too easy of an area to be going long the VIX. The VIX tends to blow up people to far more than people realize. And yeah, it just really seems like the VIX to me. It's just way too easy to be going along the VIX here, and we're probably going to see some sort of impulse move in the markets up to the upside. And I wouldn't be surprised. Maybe they finally decide on Ukraine, and it's all done by the end of the week, and or something. I'm thinking there's going to be a big positive catalyst that's going to drive this market up into the 6,200, and in that case, I'm thinking that we're probably going to see a day where the VIX is going to be down into the 14s. We still have a gap down here that could actually fill as well. So if I'm seeing VIX going into 14, and we're also going into the 6,200 area, I'm actually going to be looking at VIX calls. So that's just my personal take on things. I mean, I don't know how this is going to play out, but I just think it's too easy to take VIX calls right now. So just heads up on that. So that's just some feedbacks I got. So guys, what I'm going to do here, something a little different here. Over here on my other thing here, I got my quad grid. So anybody uses Thinkorswim, all of my levels are already drawn out here. So I'm going to share my levels. Anybody uses Thinkorswim, they can realize what that is. I'm gonna share my grid, and I'm gonna put that down in the comments on my YouTube video, and you guys will have instant access to my charts, and I will actually share updates. So in theory, they will be completely updated as long as I keep these charts. I don't undo these charts. So just heads up on that. All those charts should update on permanently if you get them. It's one of the best features of Thinkorswim. You can share your charts and you don't have to recreate them. So, yeah, I will have that in the bottom. Please leave comments below. I appreciate it. Like the video if you like it. I appreciate all my followers. Thanks a lot.